Good afternoon, traders. This is Christian Promhertz, Tribeca Trade Group, and this is your end of day recap as well as the end of week recap for Friday, August 5th. What a week it was. A lot of movers, a lot of intraday volatility, especially today. So we'll get right down to it. And again, really nice to kind of get through this week. Make sure that you have a cold beverage for today, or you're going out and you're exercising. I think both of those things are at least important to me, especially the getting in the exercise and time away from the screens. Very important. So let me get to the recap for today. The performance all over the place today. So I will, I'll go over today's so the plan for this video is to go over the price action for the day. We'll talk about some of the big movers, and then we'll also do a weekly recap, and we'll talk about some takeaways from this week and some things to watch next week. And of course, I've got about 7 or 8 charts, stock charts to go over. And thank you, by the way, for the input on the video. I got some nice feedback from you guys. So I will try to do that throughout the week in terms of turning the camera on along with these screen shares. So for the day, the Qs underperformed a bit. They were down 80 basis points. And the small caps outperformed. Even the micro caps, really interesting to me. Those had a big week. They were up another 1.1%. That was a chart that I sent out yesterday. I also sent out today as well. So very interesting to see, what areas are performing really well and what areas are not at this point. So let's talk about the main event for the day, which was the jobs report, which really kind of move things around quite a bit. And, of course, so here was the numbers, right? So change in non-farm payrolls were much better than expected, 528 versus 250. Private payrolls 471. Also, the previous month was revised up a bit. Also, average hourly earnings came up a little bit more today. So that kind of puts that on the radar of inflation. So the question is, is this something that is in the past? Because we are hearing a lot about, various different companies instituting layoffs or some type of retirement packages to some extent. So it's tough because we haven't really gotten a lot of those headlines previously, in the last year or so. A lot of companies have been doing a lot of hiring. There's been labor shortages and so forth. So it's a little bit different. And sometimes the headlines, when we hear about these things, when it's different, they could be a little bit dramatic, but it is it is the overall change. Sometimes it's not that alarming to hear about some of these companies after doing major hiring to do a little bit of layoffs, but this is what the trend looks like in terms of the job report. So this was better than expected. Now, so does this matter? Well, it does. And you could see that it's, the market does price things in automatically, right? So there were some decent moves. As you know, I bring up this screenshot just about in every end of day video. This is what Fed fund futures are pricing in for the next rate hike, right? As soon as data comes out or something changes, right, the market adjusts, right? So I know that we also like to, well, maybe not like is the that may be a little bit generous, but we, in regard to hearing from the Fed speakers, right, the market does make these adjustments for them, right? So what we're looking at, and what I've talked about this week, was we were implying for the next meeting in September 60 basis points, right? So a little bit closer to, and remember that when the Fed hikes short-term interest rates, again, short-term interest rates, right, they usually do it in 25 basis points increments. So it was closer to 50. Well, now it's closer to 75. So, that's a decent move for the day on the employment data. And then November moved up as well to 1.04. So that's a little bit more, putting this line steeper than it was earlier in the week. So yes, more possibility the market is pricing in more rate hikes that are coming for the rest of the year. Now, what could change this? right? Well, next week we have a big report next week. And, I was talking about this with members today, but we have the CPI report that comes out on Tuesday, right? It's now they're only looking for 0.2. I guess ex food and energy, they're looking for a 0.5% increase. And then the big headline number will be the year over year number, which is 8.7, which is the expectation. So this could change things. I mean, we've said that the last couple months with these CPI reports. So it does feel like a little bit of deja vu all over again, analyzing these CPI reports. But, we'll just kind of have to wait for the data. But, if it comes in less than expected, this market might continue with the trajectory over the last month. If it doesn't, and if it comes in hotter than expected, then it may continue to be a very whippy market. And how we've been handling that, or how I've been handling that, as the market kind of oscillates back and forth, I've been trying to do more day trading than swing trading. But again, it's all about adjusting to the market. And, so that I think is one way, to kind of plan for some of these things. But, those interest rate expectations could change a lot once we get the CPI and the PPI report out next week. So that's what to kind of look at next week in terms of economics. A couple other things, right? It's just some bigger observations for the week. This market has, if we look at the S&P chart, and by the way, for the week, right, here's the SPY performance for the week, right? Here's the change. But we really didn't go very far this week. For the week, we're just up 40 basis points. Right, that's it for S&P, and there was only one day where there was a big increase this week, and that was on Wednesday. There was a lot of chop, there was a lot of back and forth movement, and if we look at the S&P, we're still holding the 5-period moving average. So yes, it does look similar to what we, this consolidation that we saw at the end of May, but I will rely on the signals, right? There's a lot of people that are saying, okay, we've gotten up to I just had CNBC on, and no offense to them, because that's fine. But a lot of people are saying like, hey, this is similar to here where we've had consolidation and we've end up what's resolving to the downside. So I will wait for that to happen. I will be watching the 5-period moving average, right? That's what currently tells us what the short-term trend is for me on my charts. And right now the price is still holding above. So, you could speculate, and I've said this, I believe I've said this in a couple of these videos this week. You could speculate all you want, that's fine. But in terms of a signal, right? In technicians, often we talk about signals, right? So that would be a move under the 5-period moving average. We actually, got a little bit under that today, but we have not seen that, confirmation that has happened. So, here's the price action for the day. Again, very whippy. It's just all over the place. Big downward move. Almost you have a like a triangle pattern in here for the day, or a wedge. We made higher lows and we made lower highs throughout the session. Well, actually, this kind of got over this peak, but not by much. And we certainly didn't get into the value area for the day. So it's kind of to be continued to next week. Right. And I think maybe that might be hinging on that CPI report. It looks like we're probably going to open up some new value area for the week. But yeah, you could see back and forth all week long, right? We rallied, and then we came back today to basically where we started the week, which was right in here. So very interesting. I will get to the week's performance in just a second. But I would say too, just kind of something that I was thinking about at the end of the day, with earnings season, right? It's been a hectic week with all these names that are reporting, a lot of short squeezes going on, right? You could tell where people are positioned the wrong way. I mean, Carvana, Coinbase, a couple names like that, where, and there's plenty of other examples where, just high short interest and people caught on the wrong side. Carvana was up how much today? Right. And it's just something to, up 40% today. And the short interest in Carvana, right, So this is the thing that, and this happens on the long side and it happens on the short side, right? When everybody's long something too, and a name doesn't have good earnings, it could be painful to the downside. So it happens, the positioning happens on both sides of the spectrum. But for this particular example, the short interest is 30% of the float. When you're trading, right, one of the things, of course, we talk about technicals and signals, but it's very important as well to know what the positioning is like in some of these things. And that translates into risk to reward, right? How much more reward was in it for Carvana to be shorting at this point, with everybody already, a huge amount of people short this name already, right? So, and again, like I said, it works the same way when everyone has a buy rating on a stock and the name doesn't do well. The risk reward sets up better to the downside than it does to the upside, right? Because the expectations are super high. Well, for this company, the expectations were super low. Again, this is just a lesson. It doesn't matter about this particular company, and what's going on with this company. It matters, but this type of thing repeats in this market over and over and over. And certainly we've seen that in some other names too. All right, but you do need a positive catalyst, right? You need better than expected earnings or some type of announcement. Coinbase had this earlier too, and this had a nice day too, up about 5%. And by the way, we went right up to this version point of control, and we took that out, to the dime, and that thing kind of turned around and sold off from there. But again, another nice trading opportunity, right? What else? Just one of the things, so it's on the top line, but I've been kind of just going over some of the other individual things. But the markets have gotten a little, they're not exactly easy to trade, but I think there's been many more opportunities than where we were a couple months ago. I kind of think that could be the scenario going forward, right? One of the things that just as I was talking about with this S&P chart, right? I often hear scenarios from bulls and from bears, right? Bulls sometimes think, oh, we're going much higher. Bears think we're going much lower and we're going to return back to the lows. You may not get that. You may get something in the middle of that, right? That's a very probable outcome, right? Because one of the things that I think is very interesting that's going on right now is all the deals that are taking place, right, by institutions, right? Institutions are getting back involved and they're taking shots at companies, right? There is a couple deals announced this week, and not just in biotech. We had one in technology too, with Ping and Thomas Bravo, who bought that company. But we've seen Elliott come in and take stakes in companies. So those institutions, whether or not they're funds buying individual names or they're funds taking stakes in companies or buying them out, that has certainly changed over the last month, right? And for them to be coming in now versus what they were doing earlier in the year, it tells me something has changed. Now, again, it could change again, but this is a definite change in tone from the institutions that are coming in and saying, hey, this company now looks attractive and this company looks attractive, and they're paying a premium for those companies after they've had a decrease for the most part this year. All right, so very interesting, I think, and that's our job as market technicians and doing what we're doing and analyzing this market is you take little bits and pieces of information, right? For me, it's never just one particular thing, right? It's saying, hey, this is interesting and that's interesting, right? And then, analyzing some of those macro things. I can't believe I've gone this far through the video and I haven't talked about bonds. This is one of those things that, we're going to need to also pay attention to. I tweeted this out earlier saying, hey, you have to pay attention if you're an equity trader right now to what's going on in bonds, even though if you're not trading bonds, right? Because they affect the move. If yields go higher, right, is going to affect what goes on in equities. And if the move is large, right, it will do that. If it's a slow, gradual move, the markets can usually handle that. But if you have a move like this, like you saw today, where where TLT finished down. I look at 30-year bond futures. Again, the long end of the curve, which is different than what we discussed earlier with the short end of the curve, with what the Fed is controlling. But this is the long end too, which this also dictates, risk taking and CTA models and algos that are being programmed based on what yields are doing versus what equities are doing. So it's important. And notice that if you go back to this daily chart, we are holding the 20-period moving average. So yes, yields went higher this week. And here's the performance for the week, just so that you know what we're dealing with. I mean, TLT for the week, remember in the beginning of the week, bonds were rallying. So they gave back some of that and they actually finished down for the week. So that'll be something to watch. And then of course, the US dollar too, right? These are the two, things that, to talk macro for a minute, are two two of the headwinds for equities, right? The dollar going higher, as well as, interest rates going higher. So, interesting that this is the UUP dollar bull ETF, right? And this did find support. Now it's not the level where it was back on the middle of July, but this would change the thesis that I just talked about a second ago, that we may have something in the middle of either markets, rather than markets going right back to the upside, heavy rally, or markets heavy to the downside. I think that we could stay somewhat possibly in the middle, but this would change that, right? If we see either a breakdown in the US dollar and yields going lower, that's very good for equities, right? And if it's the other way around, if the US dollar goes much higher and yields go much higher, then you might have the scenario to the downside for equity. So again, that's why I always find it funny with people making predictions, right? You have to be able to understand what the forces are in the market and then make adjustments. So being perma like, oh, the market's going to go right back, I mean, or the market's going to go back to the lows, right? That's not what we do. We'll make adjustments as we see signals and we go along. So that said, here is the performance for the week. A killer week for biotech. Actually, I have IBB on the spreadsheet, but XBI was up, I think, 13%. The differences between those two biotech ETFs is one is equally weighted. So the small companies get the same weight as the large companies. That's XBI, and IBB is market cap weighted. So the larger companies get bigger exposure than the smaller ones. And as you know, there was a couple deals this week. So those biotechs, and that was in the smaller caps, outperforming. So that drove a lot of the performance. FANG stocks did well. Retail had a great week too. Some short squeezes there, better than expected earnings. Again, just pretty amazing to see where things are turning out basically for the consumer, where they're allocating their money. Of course, there's different levels and classes of consumers in terms of, it just is what it is. I'm not being political, but, there's some consumers that are really getting pinched by inflation right now, and there's other consumers that are doing quite well, right? That's the market that we're in. That's the dynamics that we're dealing with. Clean energy stocks had a great week this week. They were up 5%. So again, this is very interesting. When you talk about the S&P not going anywhere this week, there were some really big outperformers. And then if you look at the laggards for the week, look at the energy stocks. Now, they did come back today. They were actually, go back to the spreadsheet for the day, while XBI was up 4% for the week, again, huge performance for the week, but your energy stocks weren't that far behind. XOP was up 3% today. Right? So this is something that we were talking about in the pre-market session, that once I saw the move in interest rates after the jobs report, I thought that you might see some of these areas like the steel names and like some of the material names and energy names outperforming. And that's what I traded today, or some of what I traded today. So we'll get into my trades in just a second. By the way, so let me just take a quick break in regards to talking about what we do during the day. Every day we do a pre-market session. I send out the video on Twitter. You could you go through that if you're not a member, but here's how you become a member, right? And I think, going back to this top line in here, market's not exactly the easiest to trade right now, but much better than it was. And I kind of think that that might be the case for the rest of the year. Again, I'm being a little bit optimistic. And if that's the case, you want to be in a community and you want to have other traders giving you ideas. What better place than, if you haven't tried being a member of Tribeca Trade Group, check it out for a month. Give me some feedback. Let me know how it's going. And, I'm there to help and provide trade ideas to you. So let's get to some of those trade ideas. So, I'll talk about a couple things that I traded, but just to recap, right, where some names that had some really good earnings reports. Take a look at VRTX today, right? So this is obviously in that realm of biotech, but larger biotech, right? A little bit more of a diversified, I think, company than some of these smaller biotech names. But look at that, it was kind of lacking a little bit. Not doing much over the last couple of weeks after having some really nice outperformance. And by the way, this is really tricky when we look at the biotech chart. This literally was going sideways for a couple of weeks while the rest of the market, particularly, NASDAQ and tech, were going higher. So again, there's a lot of rotation that's going on in this market, right? And of course, that's what I look to capitalize on when we do have sector rotations and so forth. We're pretty quick with identifying that. But here was almost your false break. At this point, you could call it a false breakdown. You started to go below the 20-day moving average. You started to break the value area for the week, but not so fast as the price action, and caught right there. And very, very powerful move from that 20-day moving average. So that's what the chart looks like. A couple other names. I actually put on a position. That was the first thing that I did. I liked this name. It had really good earnings, but it got a little bit ahead of itself, right? But notice that it didn't break down. It just came right back into support. So that was the just make sure I've got this up here. That was the first trade that I did today, right after the bat, because we talked about that pre-market. You could see I did a lot of day trading today. Some positions I kept on, some I didn't, right? This is a market where I talked about making adjustments, right? I tried a couple things that I thought would have momentum to them, and then, putting alerts back, making sure that you've got a trailing stop in there so that if it backs up on you, like we saw this afternoon, going back to the intraday price action, right? When you have something like this that happens very quickly, and this was even more dramatic, I think, in the Qs, right? We made it right to the point of control for the day. And then we went all the way back and took out the lows for the day. And, so if you were trading some of these names, like I was, looking at some things like a Docu or a Shop, right? They all got off to good starts, but they gave back gains very quickly. Right. So again, tricky, right? Fever was another name that, I tried trading. So that was kind of the deal for, some of those names that had higher momentum. I thought that you might see, we were looking at some of these names yesterday, but this also gave back, gains too. And Nucor has been doing that. Towards the end of the day, it's been kind of sliding like that. So, that's fine. Took 2 targets, decided to stay with the trade, and kind of move on. SE, that's one that's been a swing trade of mine, and as long as it looks like, this is a name I've gone over a couple times this week, but I don't think it's done. Right. And it's certainly not showing us any signs of that yet, because it hasn't broken the 5-period moving average. So I'm going to try to stay with this for as long as I can, for as long as, and that's kind of part of the name of the game, is to stay with trades as they're kind of even being whippy and moving back and forth, as long as they don't break the trend. So a lot has, and that's kind of outside of this video, but it's really about position size and taking targets and making sure that that your position isn't too large, that you're getting too whipped around by this market right now. All right. But again, that's a little bit outside of this video. All right. And I did trade some biotech today. as well once that deal was announced. And Tech Resources, which was also a name that I was watching yesterday. This had a really nice day today. Again, what attracted me to this name is the weekly chart. Right, when this thing fell back and gave a correction, it hung in there and found support right at the weekly value area. A couple other names that I'm finding very interesting. This LNTH, right? This is what names do. This is probably a name that got a little bit overcrowded, right? Look at this snap back today. Still an inside day, which is crazy because it was up 10%, but the trend looks very good here. All right, a couple names I'm watching for next week. Again, they're going to be a little bit different, but Costco. I love little dips in Costco, right? That's a name that I'm watching next week because it's just into support. Home Depot's a name to watch next week too. This is going to report earnings on 8/15, but is starting to kind of make its way out of this, out of this bottoming pattern. Right. And I think as long as it stays kind of in here and above the 5-period moving average, as well as the value area, I think it'll be interesting. One name that was interesting to me too is Floor & Decor, right? Big move today, up 13% for the day. What else do I have written down? Well, I can't read my handwriting. Oh, TMO, I think is going to be an interesting name for next week. Again, earnings, some of these names that had strong earnings, they're going to set the tone for the next month. The banks are starting to look a bit interesting. BAC, which saw some calls today, didn't close outside of the value area, but I like when names do this, right? When they go sideways for a bit, right? And then resolve higher. So I got to see a little bit more confirmation than that. But yes, there was active call buying. A couple earnings names that were really interesting. Well, maybe we'll just start with this one. So net, this was an interesting one for the day because this is not a cheap name, right? When interest rates go higher, higher growth names become more vulnerable. Well, there was no pullback in this name. It actually closed on its highs. I think this could ultimately get, short-term target could be 81, right? That's the next level up that I see in this name for Cloudflare. All right, and then a couple other names too. That's the wrong name. What is this? Nope. I'm drawing a blank on what the symbol was. CEG. So very interesting. We talked about this group in the pre-market session, right? A lot of these power type companies, this is a name I traded back in here. We saw call activity, right? And this was a nice trade for me. And I've kind of just returned to this group a little bit to see what's been going on because they've been acting extremely well. A couple of them on earnings, right? So if you read what this company does, company generates and distributes nuclear, hydro, wind, solar energy solutions. So it kind of sounds like a utility company on steroids a little bit. They're called power generation, right? That's the classification other than a utility. So very interesting. Look at the breakout happening here. Good volume too, on the earnings move, on the break higher. So this is out to new highs. This looks really interesting to me. And there was call positioning in this one too. This is AES, right? So slightly different. So again, like utilities are boring, right? But this is a little bit more interesting. This operates renewable energy power plants. So it's a little bit of alternative energy, but they're more involved in the power and the utility part of the equation. Another one that I keep seeing call buying in too, which is more clean energy name, is ChargePoint. Now it's still below the 200-day moving average, but there's been a lot of call spreads that are going up in this. I would watch for a break of the 200-day moving average. All right, so that's another one to watch for next week. And I think that's it. All right. Did I bring up the performance for the week? I did. We did go over that. And there you have it. Guys, have a great weekend. And I hope to see you as TTG members. All right, guys, have a wonderful weekend.